Hello guys, welcome back to my channel all about finance. Today we are going to talk about zero depreciation insurance and is it a good deal? Customers buying a new car, taking out a loan where the vehicle is pledged, or even it's just that you want the top and best level of cover, then the comprehensive car insurance plan is the most ideal. If you own a not so expensive car, if you have a two wheeler and all you are looking for is protection against liabilities such as causing damage to someone else or their property, even a third party cover will fit your needs perfectly. Additionally, you can also option for add-on coverages like personal accident cover, zero depreciation cover, hospital daily cash benefit, etc. Deciding on a car insurance. Car insurance is the last thing on your mind at the time of purchasing a car, especially a new car. A lot of emotion comes to play and your thinking becomes blurred. Most car dealers have tie-ups with insurance company and provide you car insurance policies as added service to the buyer. Most of the companies also offer cashless repair services at designated garages. Among other things, car insurance companies also offer 24/7 on-site support, free towing service and a host of other services or add-ons in insurance parlance. If you are stranded in the middle of the road, the towing company that is tied up with the insurance company either fixes the problem on the spot or tows your vehicle into a garage. A new car owner will be unfamiliar about the various options available to him and will blindly pay for it for the policy offered by car showroom. Sometimes crafty car dealers offer free insurance as an incentive. It is only when a claim is raised that the poor car owner learns the hard way that cheap is not necessarily good. Choose a car insurance is as important as buying a car. Find out the best deal on your car insurance by comparing all available policies and reliable online sources. What is depreciation? Depreciation is the loss of value of a vehicle over time due to age, wear, and tear. For example, if a new car is purchased for INR 10 lakh, its value will decrease with every passing year. If the car is 1 year old and the depreciation rate is 10%, then the value of the car becomes 9 lakhs after 1 year. Even the event of accident after 1 year, the insurance company will calculate the claim based on INR 9 lakhs. They will also have certain deduction and exemption in fine print that are applicable to the policy. If it fits your budget, it is always advisable to option for zero depreciation car policy. For example, complete peace of mind. One accident will convince car owners about the necessity of having a zero depreciation policy. Let's take example of Mr. Desai who met with an accident. The car was repaired for Mr. Desai, paid the garage a certain sum. Mr. Desai has comprehensive policy, so he is under the impression that he will be reimbursed the full amount of the repair charges. Mr. Desai finds out too late that it's not the case. His paid amount after taking into account with the current value of the car and also certain deductions are made. Mr. Desai is not alone. Many customers think that having a comprehensive car policy will not have to pay anything. Unfortunately, the car of the deductions by the insurance company will have to be borne by the policyholder. What factors you should consider while buying a zero depreciation policy? The following points are to be considered before you decide to buying a zero depreciation policy for your car. Since this policy is applicable to new cars under 3 years, it can be purchased by new car owners. Premium in this type of insurance are more than standard policy. It would not make any sense to pay extra to insure cars that are more than 3 years old. Number of claims is limited. This is to prevent car owners from making claims for very small dent and a scratch. The IRDA, Insurance Regulatory and Development Authority. As the name suggests, this is a government regulatory agency that makes policies and laws governing all insurance companies operating in India. The mission statement of the IRDA is to protect the policyholders' interest, to promote, regulate, and ensure that the growth of insurance industry is orderly and for all matters associated therewith or incidental thereto. This body was formed to standardize the different discrepancies in the operation of the insurance companies across India. This agency has laid down some depreciation rates for insurance claim purposes. This applies to all Indian and foreign insurance companies across the country. The depreciation rates are as follows. Rubber, plastic, nylon parts and batteries are at 50%, on fiberglass components at 30%, on wooden parts depending on the age of the car at 5% in the first year and 10% in the second year, and so on. What is zero depreciation cover? What is zero depreciation cover? A safe bet would be to option for the zero depreciation cover that covers the entire cost of repairing the car without any depreciation costs and other incidental costs that insurance companies do to reduce their liability. For instance, if your car is damaged to a collision and make car insurance claim with the insurer, you will be reimbursed the total repair cost without factoring into the depreciated value of the car. Taking a comprehensive insurance cover is also not advisable, since here the insurance company will factor in the depreciated value of the car and use complex algorithms to come to figure that is payable to the policy holder. Unfortunately, many insurance companies try to short-change policyholders, which is not legal but it's definitely unethical. Unsuspecting, the policy buyers are drawn to the term comprehensive policy, which they believe will cover the entire cost of repairs for damages in their cars. Zero depreciation policy is also known as bumper to bumper cover or NIL depreciation. What is the difference between the two types of policies? In the case of comprehensive insurance, the policyholder is reimbursed by the amount after a complex calculating taking into account the depreciated value of the car. Whereas in the case of zero depreciation policy, the insured car will be reimbursed the full amount of the repair cost regardless the age and current value of the car. Obviously, zero depreciation cover will cost more, close to 20% and more than any standard no frill policy that is available in the market. This is because the insurance takes a greater risk. For example, the zero depreciation premium add-on for a new INR 5 lakh would be about INR 4000 to 4500 for a mid-segment sedan price to INR 10 lakhs. You can expect a premium would be about INR 8000. Zero depreciation policy holders have the following advantage. They do not have to pay out of pocket expenses, since the current cost of the vehicle is not taken into account. Most of the parts are settled without taking depreciation into consideration. This type of insurance gives you freedom from worrying about repair cost. So this is it for today about zero depreciation insurance, and is it a good deal? I will see you in the next video. Thanks for watching.